Good morning and welcome to the market forecast for Tuesday, March the 9th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to be looking at these markets in consistent context through the lens of risk management. I can't stress enough how important it is to have a consistent lens to look at the markets. You want consistency from the markets? Bring consistency to the markets. Good morning, everyone. Hopefully you're off to a good start this morning. We've got gold off the opening range, moving higher already. Got some things going on. As far as economic numbers are concerned, no major numbers due out. The focus this week, with the lack of important numbers, as we all know, where everybody is really kind of focusing on bond yields. We have three auctions over the next 3 days that are likely to be somewhat impactful on the markets. Today we have a 3-year note auction. Tomorrow we have a 10-year auction, and the 30-year bond auction is on Thursday. So lots of eyes on the success or failure of those auctions. U.S. stocks firmed up overnight, looking to open higher today as yields have fallen off yesterday's highs. And we await the success of these auctions. We're going to need that money to fund the $1.8 trillion stimulus package likely to pass today. The euro has found a bottom. Very interesting. The euro has been a little bit off our radar, but we're seeing a little bit of life off the lows here this morning. It was kind of helped by some vaccine news and some upward revisions in the GDP and employment numbers in the eurozone. As far as crude's concerned, it's kind of finding a little bit of balance off its recent highs, awaiting possibly some new information from the API this afternoon and EIA tomorrow. As always, like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. As far as the VIX is concerned, down about 3% off its close yesterday, down at 24.72. The dollar index off slightly this morning, 92.06. The dollar continuing to be quite firm. And the 10-year yield down a little bit this morning at 1.542. Still holding above that 1.5 level that put the chill in everybody last week, but seeming to come off that high. It traded up above 1.6 yesterday and has been kind of falling off ever since. Looking forward to another interesting trading day. They're always interesting and always full of opportunities, some bigger, some smaller opportunities. Always be thinking risk management first. Anytime I think about taking a trade, the most important is, okay, what do I have to risk to get into this trade? Where is my true point of invalidation that I'm looking for? If it's too much, I'm going to pass, or I'm going to make sure I wait and get better trade location for that trade. Always be thinking in asymmetric opportunities where you can risk a little bit and your potential profit target is far greater. To me, that's the edge that I look for. That's the edge I hope for all of you. All right, so let's take a look. Always like to say good morning to everybody. The infamous Felix Escobar, first in the room. Felix, you win the prize today. Ralph, a close second. Da H. Good morning. When do we start trading the June contract in the Nasdaq? Well, the rollover date for our equities as well as for the currencies is Thursday, this coming Thursday. That would be March the 11th. However, I'm going to be watching the volume, watch the forecast on Thursday morning. We're probably going to still see greater volume in the March contract, but by the end of the day, we'll probably see greater volume in the June contract. So my plan right now is to continue to trade March through Thursday and then switch to June on Friday. Friday morning, we should see much bigger volume in the June contract than March. Either contract is going to be fine to trade on Thursday. It's just a matter of kind of looking at to get the timing right to see which one has the more volume and the greater liquidity is really the question here. Either day is going to be fine. Don't worry too much about getting it absolutely right. You're fine in either contract on Thursday, but I'll be looking to the June by Friday. By Friday, all the charts will be changed, and we'll have 3 good months of non-rollover activity. Rollover tends to make markets act a little bit weird. Sometimes they don't go far enough. Sometimes they go too far. Remember, it's the longer time frame that is working on getting a cheap rollover instead of being so concerned about directional activity whenever we are in rollover. I can remember back in the days in the pit, there were outright traders that refused to trade the week or two of rollover because it just changes the market. They'd take their vacations during rollover, and then they'd come back after rollover and then re-engage in the marketplace. The changes are subtle. It's not an obvious thing, but if you're having a difficult time during rollover, rollover might have something to do with that. So a great question, and we'll be talking about that as the week goes on. So I look forward to seeing you, and we'll talk about that more as the week goes on. Good morning, my brother Rick. Good morning, Ednelson. I hope I'm saying that right. It's good to see you again. Kevin Guy, good to see you. Ricardo, Taurus Trader, good morning. Brian Murph, hey, good morning to all you great traders. It's going to be a great day. Love the positivity. Murph, keep it up. Happy traders make better traders. This much I know. Good morning, Bill. Good morning, Laura. James, level 2. Level 2, where you been? Haven't seen you for a while. It's good to see you. Hope things are going well for you. Jason, good Buenos Tuesday. Buenos dias. Magnum, Jonathan, Cesar, Richie, level 2. Love overnight trading in an active market. God, it's just good to see you again. Level 2, we're glad to see you back. Danny Ireland, Rocker, good morning. Now I will be asleep or gaming by lunchtime. So you've had a good evening, good overnight trade. Good to hear that, level 2. For me, if I had a preference for sleeping or gaming, I'd probably be sleeping. But I'm old. Charles, the chef Mike is here. Keith, good to see you. Tim, I'm not sure how to say this. I'm going to say Legif. Good to see you. Thanks for popping in and saying good morning. I'll get it right one of these days. Modesta's NQ is over 2% on the day. Can we still trade it? Please explain the 2% rule. The 2% rule is largely on the downside and mostly in the overnight. The 2% rule is in the overnight in the Nasdaq. It's a 5% limit. The market can't move more than 5% in either direction. So anytime the market has moved more than 3%, we want you to stop trading. And that's only, again, in funded accounts. You don't have to necessarily worry about that in the trading combine or in step 2. Anytime the market, let's say the Nasdaq, in the early session, it's a 7% price limit. So if the price moves 7%, it's not going to be able to move any further. So you end up basically kind of with a whole bunch of offers to sell and unable to push price any lower because you're at the limit, and you can get stuck. If you're long and you're stuck limit down, you're unable to get out until it reopens. It is a bit complicated. I'll give you that, Modestas, and keep asking questions. Today it's not a problem for you, and the Nasdaq so far is up. It's only on down days that we really concern about ourselves over that, because outside of the overnight session, there's no upside limit. Michael, good to see you. Taurus. Yes, you can still trade till it's 5%, right? And that's in the regular trading hour session. Last I checked, it was 5% overnight, 7% in the regular trading hour session. And then if that gets breached, then it goes to 13% and then 20%. And then at the end of the day, there's no limit. So, good question. Keep asking. George Mitchell, good morning. Suki, good morning. Nico, Oleg, good morning. Gino, level 2, house dude killing me. Oh, my goodness. Well, you had some difficult weather down there. I know that at level 2, and sorry that you're having to spend so much, but I'm glad that you're with us. You're here, and you're able to continue moving forward. So stay positive, my good friend. Vast West, Michael Thomas. Okay, changing my nickname. That's okay. Whatever it is, I'll figure it out. It's kind of hard for me to see without my glasses, but I'm going to call you Leg. Leg. I don't know if that works for you. Angelina, Modesta, Nick. Is that automatic? No, it is not. The limits for not trading within 2% of the downside limit is not automatic. You can see the percentage if you have a quote board. A quote board is going to tell you the percentage of the move just in real time. So put up a quote board and you'll be able to see that. Vlad added a third monitor to the setup. Lots of charts to watch. 3 platforms running. You don't go too complicated on me now, Vlad. Vlad, sometimes being complicated is not necessarily a good thing. Good morning, JD. Bulldozer. Can you trade the breaker reopens when it's at 3%, 13%? Once it reopens, you can trade it again. But once during the session, if we get down 11% and the limit is currently at 13%, we want you not to risk being stuck in any positions if it does go down the limit. This doesn't happen very often. We realize it's a little bit more of a volatile period of time. Last time this happened was last March, and the time before that, I think, was about 10 years before that. So just keep an eye on it. And, of course, keep an eye when there's volatility for where we are as far as net change in percentage from the previous settlement. The Dancing Bear is here. Yes, he is, LT. Good morning, everyone. All right, so I'm going to go ahead and put the link in for market therapy, which is tomorrow. I'm also going to add the link for group coaching, which is also tomorrow. Group coaching at 1 p.m. Central Time. And we have the market therapy at 3:15 Central Time in the afternoon. Markets are already closed. The good doctors are going to be with us. We're going to talk about what to do when you get your switch flipped, what to do when you go a little bit crazy, what to do when you hit tilt, and how to recognize it, and maybe some ideas on what to do about it. So on that note, I do have solid charts this morning, and we're going to start as always with the daily in crude. Let's take a look. All right, so this is the daily in crude. Obviously, we've got the market moving higher over time. It seems as though our weekly kickoff low here, 63.80, has been supportive after the move above it last Thursday. This is Friday's low. This is yesterday's range. Starting to see a little bit of divergence in volume. Divergence means, when we see an auction in one direction, just for that auction to remain healthy, we want to see higher and higher volume. We're starting to see volume cutting off, and it makes a little bit of sense. We had some pretty big surprises in API and EIA last week, and I think we're probably looking at some surprises this afternoon and tomorrow for EIA. So the market really kind of in an upside digestion market state here. We had 5,800 contract loss in open interest yesterday. It tells me we had some profit taking. Some of our longs potentially holding positions from much lower, deciding to take some of those positions off. Doesn't mean that the market is done moving higher. It just means some of the participants yesterday with that loss in open interest on a down day, on lower volume, decided, okay, we're going to take some of those profits and we're going to put those in our pocket. What happens next? Well, when we have long liquidation like this, we have removed some of the selling power out of the marketplace. Okay, so the market is now kind of more of an even inventory level, even longs, even shorts. I know that there's always a long for every short and a short for every long, but it's the difference in time frames that makes a difference here. So volume remains pretty good, not tremendous. We're starting to fall off a little bit. I'm looking for this market to kind of digest and wait for this new information this afternoon and tomorrow. This is the 30-minute chart. Settlement is right here, 65.05. Where are we? Well, that's where we are. We just opened right at settlement. No change in the perception of the value of a barrel of crude oil from where we closed last night to where we opened this morning. We're inside the range. We're inside value. This always suggests to me that, you know what, I'm going to have to stay patient. I'm going to wait for better trade locations as the day goes on. I'm not going to be in any big hurries to get into anything because, again, we've opened right where value was yesterday, right where we closed yesterday, right where the point of control was yesterday. This is a very comfy and overused area. We spent a lot of time there. This is not the area that I'm going to be looking for opportunities. I'll be watching for opportunities perhaps near our overnight low or perhaps near our overnight high, because those have already shown signs in the extended trading hour session to be too expensive or to be too cheap. Right in the middle, not interested. Stay patient. Stay patient. When we take a look at where the market has driven us overnight, we have some specific short time frame interesting levels. Our overnight high, point of control from Friday. Our overnight low, point of control from Thursday. These points of control, again, are places where price returned to a lot. This was the highest volume from Thursday, the highest volume from Friday. These are very comfortable levels where two-sided trade was easily transacted, but that's not where I think we're going to find our better trade locations. I think we're going to find our better locations perhaps at those levels because they've been revisited, but now they've been rejected on both sides. So try and stay a little bit patient in the crude oil, awaiting new information. Big move to the upside digestive trade. What's the word I'm looking for? Market state, upside digestive market state. Be patient. Look for extremes, and our initial extremes for this session today, overnight high and overnight low. E-mini S&Ps. The E-mini S&Ps, the elusive, interesting, opportunity-laden, fun-to-trade, thick market S&Ps. So here is the daily. I'm going to get it nice and big here so everybody can see. As we've mentioned for about the last week or so, we've been expecting basically volatile range-bound activity. Some really big ranges, but where are we? We're in the middle, basically, of this volatile range-bound activity. It's rollover. That's going to have something to do with this. Looks like the market's going to be opening, guess where? Right back at 38.58. This level here is almost become more of a nag than an opportunity, it seems. It was pretty magnetic yesterday. This is our weekly kickoff high. We've had a hard time trying to hold above it since last week when we opened above, traded down below. Now we're back to it again, and it seems to be somewhat of an important level, however a bit challenging because it's kind of a pivotal level. It's long above, short below, and it can chop you up. Don't forget we have roll over the end of the week. Volume and open interest are going to start to look a little bit blurry in the front month. We added 16,000 overall, in the overall open interest yesterday. All right, well, that's something that could be rollover traders just legging into and out of their positions. It's not a huge number. Volume off a little bit. Here and here. So the market really just kind of falling into an area where the longer time frame traders are trying to get a cheap rollover. We've got an inside day in extended trading hours. That is also something of interest. We have not traded outside the extended trading hours of yesterday. Got a smaller range going today. Let's take a look at the 30 and see if there's anything on here that can help us in our activities today. So, volatile, range-bound activity. Up here, bam, all the way back. Up here, bam, all the way back. Here, all the way up, all the way down. Now just kind of falling back into the value and range from yesterday. Here's our overnight low, our overnight high, even inside the extended trading hour, the regular trading hour session from yesterday. Settlement all the way down here, 38.1925. Got a lot of short time frame longs in this market that have taken the market back into, guess where? The value area from yesterday, and for another area of fun and excitement here at 38.58. It's going to be an interesting area. When the market opens up, what are these overnight longs looking for? All of these longs holding these positions from all night are looking for an acceptance above this area and a continuation to the upside. If they do not see that relatively early, there's no gap, but we still have this relatively early thing. We're looking for longer, stronger buyers to come in and continue this market to the upside if we're going to be a short time frame long trader holding longs from last night. If we don't see it, these overnight longs, they tend to get a little bit nervous at the same time. We may see an opportunity for this market to push back down towards our overnight low or even dip back down to settlement. Here is, just seeing what else. Don't forget, anything that happens in the equities today, there's going to be a lot of headline news. The stimulus, it's up to pass today. We've got the bond auction, the note auction, the 3-year note auction. If that doesn't go well, what's that going to do to the markets? Make sure you protect yourself. Yesterday I was looking for some continuation to the upside yesterday, and boy, whatever came out here at about 12:30, whatever that was, certainly changed the face of what I thought might happen yesterday. So be accepting of information. Keep your eyes and ears on the news. When you see something move quickly, it may be something that has come from the news, and you're not going to be able to see it in the news before it happens. The markets are going to react first. So please protect yourself in anything you do today. Make sure you use, at the very least, some sort of protective stop, even a catastrophic stop if you have to, just to protect yourself. Don't want anybody blowing anything up today. All right, so a lot of overnight longs up against the weekly kickoff level. It should be an interesting morning here for our equities. The Nasdaq, same but different. Same but different. The Nasdaq has been pushed considerably deeper off the highs than the S&Ps. We've taken a pretty good kind of look. This weekly kickoff low kind of lines up with this swing low. It was our low from last week. We're really kind of digesting it for the better part of this week. We've got 1, 2, 3 days basically in balance. We've got the rollover blur, a little lower volume yesterday, but again, that's probably due to rollover, adding 14,000 in open interest. Again, possibly due to rollover. And we still have an inside day in an extended trading hour session indicating continued possible volatile, range-bound trade. Settlement all the way down here. This is the 30-minute chart, 12,297 and a quarter. All of our longs, all of our activity overnight was getting longer and longer. And these are not big players. These are pea shooters like me. These are just traders that traded overnight. They've accumulated a long position, basically hanging around the point of control from yesterday. Of course, that's what they're going to do. It's a warm and fuzzy place. It's where a lot of trading has occurred. Why wouldn't we want to trade there? We don't. We don't want to trade here. So as this market opens up, There's no gap. There's nothing other than overnight inventory with which to worry about or which to consider for a move back down towards our overnight low or our settlement price. Again, if we see buyers come in longer time frame and push this market higher, that's going to embolden our overnight shorts, which are weaker hands, weaker money traders, pea shooters like me, to stay in or even barrel into those positions. If we don't see that continuation come relatively early, the opposite is likely to occur. If we run out of buying up here and we see all of these overnight longs say, hey, what happened? We're not going that way anymore. Let's get out. All it takes is a few of them to start that fire, and we can start the fire back down to the downside. It's the thing about settlement is, when we get too far away from it and no longer time frame participation comes in, there's a big tendency to come and recheck back down towards that settlement. It's an inventory adjustment that sometimes can provide some decent opportunities. Gold. What do we see? We see downside continuation. We see downside continuation on falling volume. This volume divergence may be part of the reason why we're seeing this pretty decent up move today. We've taken a look relatively close to our weekly kickoff low here, which was in 1669. This market has been moving lower for quite some time. We added another 15,000 in open interest to the downside yesterday on lower volume. Did we trap a bunch of shorts down here? It certainly seems that might be the case here today. This volume divergence can be very helpful. When you see an auction moving in one direction and the volume starts to fall off, that can say, you know what, this auction is aging. The sellers are no longer as prevalent or as strong as they used to be. There's likely a change coming, and we're seeing it right now. Here we've got gold settlement down here, 1678 even. All night long, we got longer and longer. We probably have a whole bunch of traders short in the hole here. This is what we're looking for if we want to continue to see the market. If we're long, this is what we want to see. We want to see buyers come in on the open and continue to push this market higher. Our opening range this morning was left at the low of the regular trading hour session. That low of the opening range is 1701.50. We've obviously had about a $13 move, $1,300 per contract to our high of the session here. And if we were watching this and we saw that the opening range was the low of the session, perhaps we've been able to participate in all or part of this move to the upside. How far does it have to go? Well, we've got a kind of a naked point of control right up here that remains unchecked. It's one of the kind of bigger targets that I would look for. Takes us all the way up to 1724.90. It's a pretty decent move. It's a pretty good move. Not out of reach. As long as we continue to one time frame higher, in other words, lows are higher sequentially, highs are higher sequentially. This would be a pretty good, obvious visual target for the move to the upside. To the euro, holy cow, man! I can't believe that it's almost equities opening here. In just a second, I'm going to get through this so we can get down to business. This is one of the reasons why we talk about doing this at 7:45 instead of 8 o'clock. I didn't even realize I was yammering so much. Oh my God. So an overnight test of the weekly kickoff low last night. Volume dropped yesterday. Again, we are in rollover. This could be a function of that. We added 8,000 in open interest to the downside. Have we trapped some shorts here? It's beginning to act like that as well, almost very similar to gold, the 30-minute chart. Overnight longs, no gap, but the fact that we opened at the high of the range from yesterday has kind of driven us with a little bit of support. Our opening range is not the low of the session, but we've seen, a little bit of an adjustment in inventory. We're seeing a continuation. If we can't take out this overnight high at some point in the session, I think all these longs are going to take us back into range from yesterday and even perhaps back down to the value, to the settlement price, which was 118.59, and to the 10-year, where yields, have fallen off their highs. We're starting to see volume kind of weakening at these lows. Here we have some big volume on these 2 days. A move lower didn't bring the same amount of volume. Yesterday, lower volume. So again, we're starting to see that volume divergence here in the 10-year as far as a technical thing is concerned. Okay? So, where am I? So again, volume weakening at the lows, rates off their highs. Makes sense that this market is going to move higher. The settlement price 131 and 28/32 down here, all overnight longs, all looking to see if the market is going to continue to move higher. I think that they're going to have a lot to wish for here because of the auction today and the 10-year auction tomorrow. I think we're going to probably remain relatively range bound, and I'm a little bit worried for our overnight longs here. If we're going to stay range bound, I think we may have put in our overnight high, regular trading hour session high here. We may see this market come off. A lot of that, of course, depends on rates. If we get a couple of little upticks in rates, that's going to be just enough to scare our overnight longs into capitulating back to the downside. Where am I? All right. I've got a lot of questions and thoughts here. Hang on one second. I'm gonna try and take just a couple of minutes and discuss what questions are here. And okay. Will Topstep ever branch into options? It's something that we're always considering. There are some considerable tech issues, and kind of trying to figure out how to do it. It's something we're always working on. I don't have any definite one way or the other if that's going to happen. It's something we are considering, and of course, trying to figure out the best way to do that and the best way to offer the options opportunity to our traders. So, we're not going to do that until we can find an excellent way to offer that. And again, I don't have any timeline or specifics on when and if that's going to happen. It's a great question, Emma. I appreciate it. How do you determine the 38.58 inflection point in the S&Ps? Trading research. The weekly kickoff levels are areas where I believe that the market is going to either push or cause a desire for longer, stronger buyers to come in and enter the market one way or another. The way I come up with them, it's part technical, it's part visual, it's part math, and it's part market profile. It would be very difficult for me to try and explain how I come up with them. And besides that, it's something that I kind of keep proprietary to myself. Those are my babies. If you find them useful, I'm very grateful for that, and I'm very happy that I do put them out for your use. I look at them. I find them as important areas for me to be ready for an execution one way or another. But again, I can't, and I don't offer out how I come up with those. I apologize. What's the best way you use to check open interest? Well, Charles, there's a here, I'm going to put a URL or a link in, and this is where I get my open interest information. Now, we can talk more about how to use this tool on another market forecast, or I suggest coming to the group coaching tomorrow at 1 o'clock Central p.m. and ask the question, and I'll have a lot more time to go over how I look at it, even sometimes how I collect and hold on to that information for use over time. Wish Hoagie did a midday trading hour stream. Would be cool to hear the play-by-play. It's a good idea, Michael. I know that there are people here at the company that would love to do that, and I'm going to see if there's something I can do to kind of fit that into my schedule. I think it's a good idea. You know what? I'm going to write that down. Midday stream. Awesome. Thank you for the suggestion. That would be a lot going for an hour or two after the open, but gosh, I've gone so long here. I feel like okay. All right, Michael. Good. Well, we'll see you there then. Awesome. All right. On that note, I've gone way too long. Equity's open. I'm going to take my deep breath. Stay humble, grateful, and creative today. Dan will see you for the recap today. Well, we also have the Coach's Playbook today. Looking forward to seeing you there. And I think that's it. Get out there and profit today. Have a good trading day. Be aware of all the headline news that's out there. Be ready for anything. Get out there, profit. Have a great trading day. Trade well, and I will see you later on today.